Welcome back to Benchmark. In this, our last installment on the Budget 2012 series, we talk to Suresh Shah, a Director and Chief Executive Officer of Lion Brewery. In this exclusive interview, we discuss his expectations of the budget, changes that he feels could be implemented, and the problems that may be addressed in the upcoming fiscal budget. Here are excerpts. Good to have you on Benchmark's Budget 2012 special, Suresh. Thank you very much for joining us. Now, when you've looked at last year's budget and you're looking at this year's budget, do you think Budget 2012 will actually live up to expectations and deliver more of the same? Or what do you think would be the differences? Would there be anything different for you to look forward to?
Yeah, I think you got to go back to the policy paper, policy document that was put out early 2010, I believe it was, where the government laid out a fairly comprehensive plan in terms of what they believe the economy should look like going forward. The real question at the time was whether they will actually execute on that plan, and people were really waiting for the 2011 budget, because that would have been the first indication of whether the government was serious in terms of executing on the plan that was put forward. Firstly, let me say that that plan itself was seemed to be a very good one, to which I think the private sector could lend a lot of support. So the first indication was the 2011 budget, and I must say that the 2011 budget did deliver a lot on what was promised in that 2010 document that was prepared, and I believe it was the start of the process. So I would expect that the same thing would be continued, and that the 2012 budget would be an extension, in a sense, of the 2011 budget. So I would think that that's the rational course of action.
Now, Budget 2011 was hailed, especially by the private sector, as being quite revolutionary, in fact. But however, were there any areas that this budget, that the 2011 budget, fell short of? And do you think those would be addressed this time around?
I really can't put a finger on one area and say it sort of fell short of expectation. I think it sort of met or exceeded expectations, particularly of the private sector. I don't think the private sector expected that kind of budget, and so from that perspective, the expectations were sort of met or exceeded. So the question is, what more can be done, right? And I certainly see room for further simplification of the tax system. I see more room to expand the tax base in the country. I do see more scope to rationalize on the expenditure side. So these are, I think, things that can happen going forward. So from an expectation perspective, I would say these would be the main elements.
Now, you were speaking about the tax structure. You would agree that while there have been quite sweeping changes made to the taxation structure, that there's more room for streamlining and grouping and, making it easier for the ultimate end user. Now, what areas do you think would require more changes and more streamlining?
On the simplification side, I think for sure, yes, there is scope. So we hope that will continue. In terms of tax rates, I think it's no longer unreasonable. I mean, corporate taxes at 28%, there is very little else that can be done from that perspective. But like I said, there is a lot of scope, I think, to broad base the tax system further, to bring more people into the tax net. I think that is important, because to sustain a relatively low tax rate regime, you need to have more people coming into the tax net. So I think that's an area of focus that's required. And I also think that rationalization of the expenditure is a key element going forward, in two ways. One is to try and take the waste out of the system. The other is to prioritize the expenditure. So for example, I would like to see a lot more expenditure going into, say, health and education than has happened in the past.
So there's this debate, direct versus indirect taxes. Which side of the fence are you on?
Any tax system will have both direct and indirect. It's a question of what percentage and how do you balance it off. Pros and cons to both. I mean, direct taxes work more on the affordability principle. So the people who earn a greater amount of income pay a greater tax. The problem with that system is then you are dependent on higher tax rates, and the minute you increase your tax rates, there is then evasion is one, and the other thing is that it demotivates people from producing more profit. You know, why be more profitable if 60% of that, for example, is going somewhere else? In the case of the indirect taxes, is a problem. The problem really is that everyone, irrespective of level of income, has to pay the same amount of taxation. So it's a fine balance, and I think depending on different economies, your strategy might be a little bit different, but I think fundamentally you got to live with both. From a very public perspective, you would say that direct taxation is a better system, but I think from a reality perspective, when a country needs tax revenue, I think generally the dependence is more on indirect taxation. Which one is the better one? I don't think anyone has really found the answer to that.
What about VAT? Do you think it is an equitable method of taxing the citizen?
A government does require revenue. It needs revenue, and it depends on how you structure that. You know, you say you need a certain amount of expenditure. Again, it depends on how you structure that expenditure. So it needs certain amount of revenue. The question is how do you build it? Now, of all the indirect tax methods that you can have, VAT is probably one of the better systems because it allows you to set off the tax you paid at the previous point. Now, with lots of the other indirect taxes, that is not possible. So, you know, this is the debate that always goes on. See, you will never find everyone agreeing on, you know, on a right answer.
So how are you perceiving the trend in inflation, which is quite stable, the rupee, which is stable but then has shown a little bit of up and down recently, and interest rates again stable, and also there's this widening trade deficit, and also the foreign remittances, the ever increasing foreign remittances, which is propping up our foreign reserves. What are your ideals? What are your expectations?
I think a low inflation regime is what we would look at. Again, this is very relative. So, for example, in Sri Lanka, a 7% rate of inflation would be considered low because we've had levels of inflation previously which went to 20-25%. Now, in some other country, a 7% inflation rate might be considered very high. I think you need a certain level of inflation in the economy, but I would say around 5 to 6% is, or maybe even a little less, closer to 5 really, would be sort of the ideal. So yeah, I mean, the expectation is that it would be managed at that level. However, it's you know, it consists of so many different things that you got to work on. You know, you were talking about imports and exports. Now, as an import dependent country, we import our oil, for instance. A lot of our food comes foodstuffs come from overseas. A lot of the raw materials that go into production come from overseas. So we are also, in a sense, exposed to imported, what we call imported inflation. So that factor is also there. But yeah, from an ideal perspective, 5% would be what I would like to see.
Time for a commercial break now, and when we come back, Suresh Shah discusses debt, poverty reduction and sectors that need help from Budget 2012. Stay tuned. Thanks for staying with us. We now have more excerpts from our exclusive interview with Suresh Shah. So Suresh, as a country, when you look at the amount of debt each citizen is in, it is a lot. It is quite mammoth, in fact, and this is a debt we are passing on to our future generations. Can you live with the rapidly increasing levels of national borrowings, probably in the name of development? Is this a necessary evil that we all have to live with, and our future generations too?
Again, you have two sides of this. On the one hand, when you look at it as a percentage of our GDP, debt has actually come down. But if you look at total debt in terms of dollar value or rupee value, the debt has gone up, like you said. I think as long as the debt is you know, within limits, as long as it's taken to build up a capital base which in future will generate revenue for the country, and as long as you can repay your debt with that revenue, I think it's okay. So the real issue is well, on the one hand, the amount of debt you take, but I think the bigger issue is that you're disciplined enough to take the debt in a way that you can repay it. Okay? So, if you take debt to provide subsidies, I don't think that's a good thing to do. But on the other hand, if your debt is to, let's say, fund infrastructure, which would, at a later date bring revenue into the country, then I think it's okay. But as long as the revenue is sufficient to meet the repayments and the interest going forward.
So what about poverty and the working poor? Has the government made good on its promise of last year of reducing poverty to 5%, you think?
Quite frankly, Savitri, I don't think any government has really focused on providing sustainable relief to the poor. Now, I think the emphasis over the years has been, give us handout. I don't think handouts really help the poor, not in a sustainable way. I think the real fundamental issue to bring the nation or bring the poor out of poverty is to provide them employment, right? There are a few factors that limit the employment opportunities available. For example, we have some very tight labor laws, right? Now, at first glance, having very tight labor laws will protect the existing employees, okay? But as a result of that, what companies do is they look at these very tight labor laws and then they say it's more practical to automate our plants, right? So, the scope available for increasing the employment potential becomes limited. Now, so if we had, say, more flexible labor laws, for instance, I think more companies would take people on. So we, over the years, we've been more concerned about the political implications of some of the decisions rather than take decisions would really have a sustainable impact. So yeah, there is a lot of work that can be done, which hasn't been done, and it's not restricted to any particular government. I think over the years, it's been the case. If we really want to take Sri Lanka or Sri Lankans out of poverty, the people who are in poverty, we need to create employment. So we need to create investment opportunities, we need to look at the rules and regulations, we need to build export markets and so on and so forth. So there's a lot of work that needs to be done.
When you look at the overall agenda of national development, what are the sectors do you feel that can actually contribute towards this national drive? Sectors that may require tax concessions and holidays and a little bit of a leg up to make sure that they get there and they drive the economy.
The few areas that you would really should focus on, one is on the export sector. I think we need to build up our export base, and we also need to diversify our export base. For instance, I think economic power, as you would have seen in the last few years, is gradually shifting from the west into the east, right? But nevertheless, our exports are focused very much onto the west. Now, this is, I'm not in any way saying that, in the next 5 years, the west is going to sort of lose its power. No, that's not the point. But the east is gradually becoming a more prosperous society than it used to be. And I think we need to shift our focus onto the east as much as it is onto the west at the moment. So that is one area of diversification. And I think government policymakers need to promote that. Okay, so that would be one area. The second area is, we are a small country and it's not possible that we can gain economies of scale. Okay, so I don't think we can build an export base on cheap products, on cheap costs. I don't think that is possible. For example, China has to still bring 400 million people out of poverty. India has to still bring probably 600 million people out of poverty, right? And using those people, they can always be cheaper than us. And there are bigger countries than us, the Bangladeshs and the Indonesias and so on and so forth. So I think Sri Lanka as a country needs to focus on the value addition side, right? We need to find small niche markets in export markets, which the Chinese and the Indians will say is not big enough for them. So we need to find these small niches where we can add value rather than be dependent on low cost, okay, and focus on those. So I think from an export perspective, I would look at three things. One is build up the export base. One is diversify into value added small niche areas. And thirdly, look at the east. So those would be three things. Your previous question about poverty, etc., and the need for investment. I would really make Sri Lanka a place which is very easy to do business in, okay, to attract investment, both Sri Lankan investment as well as foreign investment. So what can we offer somebody who's coming in from overseas, for example? Now the reliance in the past has been a lot on tax incentives. I don't think that's really that important. I think it's more important, the ease of doing business is, I believe, more important. Now Sri Lanka is, I think, has come up the rankings this year, but we are still not where we should be. I think we should target to be around in the first 25 if we really want to attract investment into this country. So I would focus on those two areas, exports and generating investment, and of course tourism. This goes back again to your previous question on the balance of payments. See, we are an import dependent nation, and to meet our import bills we need foreign exchange. So you get foreign exchange via exports, you get foreign exchange via remittances, you get foreign exchange via tourism. So that's another area I think where Sri Lanka has huge potential, and I think we need to develop.
That was Suresh Shah of Lion Brewery. The Voice of Business is coming up after the break. Stay with us.